Stock market corrections like the one global stocks have recently experienced in fact provide a wonderful opportunity to identify potential winners of the next big advance, whether that advance is a bull market rally or a bear market rally. Let me show you how we found a big winner in a high-growth tech stock, Afterpay Touch Group, which is Australia's version of PayPal or Square. Although this example is Australian, the principles can be applied to any stock market. Stock market corrections separate the wheat from the chaff, but when everything is down by 20, 30, 40% or more, it's hard to know which stocks have the best potential. That's why it often pays to wait and see which stocks recover faster than the average, as measured by a major market index. By waiting for the cream to rise to the top, you let the market tell you which stock should be on your watch list, and eventually in your portfolio. The graph at the bottom of this chart shows one way of measuring the relative price performance of a stock. It's the ratio between Afterpay, the top graph on the chart, divided by the ASX All Ordinaries, the middle graph on the chart. When the ratio is rising, it means that APT is outperforming the All Ordinaries. When it's falling, it means the stock is underperforming the market. During the early 2018 correction in the All Ords, APT fell faster than the market. But then as the market uptrend got going, the stock started to outperform. But APT really got our attention when its relative strength ratio approached its prior high, shown by the dashed blue line. At the same time, the stock itself approached its 52-week high, shown by the dashed red line. We knew that it was just one strong breakout away from potentially embarking on a sustained uptrend. Therefore, we titled the chart, quote, "An Aussie PayPal about to explode?" Coincidentally, the stock broke out the next day, supported by a breakout in its relative strength ratio. And as the stock followed through on the breakout the next day, the relative strength ratio soared, which added to the evidence of Afterpay's potential. Although APT would briefly test its breakout level, both the stock and its relative strength ratio continued to follow through on the breakout, which was a positive sign. APT's superior fundamentals and relative price strength put the stock on our watch list, but our primary reason for highlighting the stock was its clear developing wave structure. The shares had traced out 5 waves up since their IPO, followed by 3 waves down, which meant that they had probably begun another impulsive advance, possibly a third wave. And what a forecast that turned out to be. The stock subsequently increased more than 5-fold to its 2020 high, before logging its first weekly close beneath the lower channel line. That was a clear sell signal, so we wrote in our March 2020 issue, quote, "APT has begun a correction of the entire advance since its IPO." And the sell-off since then has been stunning. It's not often that newsletter writers with fixed monthly publication dates get a chance to identify optimal entry and exit points for an individual stock, but we got lucky this time. Notice that it was not necessary to try to call the end of the correction in the stock in early 2018. Instead of buying a low, we were essentially buying a high and selling much higher. APT's strong fundamentals, its post-correction relative strength, and its strong breakout near 52-week highs were all extra evidence to support our wave count for the stock, which served us well right up to the end.